Good afternoon and welcome to Biztech's Asian Midday Market Watch, powered by Rajhi Bank, Malaysia. Our guest today is Vishnu Varathan, Head of Economics and Strategy at Mizuho Bank, and he's coming to us out of Singapore. Vishnu, great to have you on the show this Monday.
Always good to be here, Brian. Great way to start the week. Thanks for having me.
Now, Vishnu, before we get your insights, we're going to look at crypto markets first and then regional stock markets. Bitcoin is at 31,270.1. It's up 5.21%. Ethereum is at 1,882.05. It's up 5%. Looking across the regional equity markets, and first we'd start off with markets in Singapore, South Korea, and Malaysia are closed for public holidays. So we start with the SGX. That's up, so in fact, that's down 0.13%. Looking across to Shanghai, Shanghai is up 1.13%. The AXX All Ordinaries is down 0.37%. The Nikkei is up 0.73%. And rounding up the numbers, we've got the Hang Seng, which is up 1.37%. Vishnu, what's your take on market performance in the first half of the day?
Well, I think certainly China's slightly more upbeat tone is helping, or at least backstopping. But the bigger deal is that from the US market, downturn that we saw on Friday following stronger than expected jobs number. So in essence, jobs were uncomfortably strong, so much so that markets now are once again concerned that a Fed that will be forced to tighten may inadvertently over tighten, leading to a recession. Maybe not all of that is baked in, but at the margin, equities, of course, didn't take well to the prospects of interest rates rising a little bit faster than was hoped for. Interestingly, we also saw U.S. Interest rates climbing in response to what the Fed may do, but yields then softened back, so they didn't rise as much. They peaked out earlier, and part of that might have to do with the fact that the recession worries also restrain the upside in especially in long end yields. Interestingly, we also saw oil prices that were higher despite OPEC upping their output output targets by about 50%. This may have to do with the fact that Saudi has alluded to demand being better than anticipated earlier, so that's part of the story. But of course, the bigger issue around it is none of what the OPEC Plus is doing will A, fully offset Russia oil risks, or B, effectively come through as output, given that apart from Saudi and UAE, the rest are struggling to even meet existing targets. So it's just a paper exercise rather than one that hits the pumps.
Now, Vishnu, I want to first zoom in on recession fears. And so I want to give you two quotes which came out last week. One from Jamie Dimon, who's the CEO of JP Morgan Chase. He said that a hurricane is right out there down the road coming our way. Now, this sentiment was echoed by Goldman Sachs President John Waldron, and he called the overlapping shocks to the system imminent. So obviously, there's a big fear in the market that the Fed will actually over tighten. What's our view out of Asia in terms of recessionary fears across the region?
Recessionary risks are certainly non-insignificant. I'm sorry about the convoluted phrasing of that. Basically, I'm saying, yes, it's a risk. We need to be worried. And a lot of that has got to do with, I would say predominantly it's got to do with how the Fed would react to its balance of risk and just how much it tightens. That remains the dominant factor, but we also cannot discount other factors, such as China. Is China going to boost its economy enough? Is it going to open up borders and give some relief through the travel and tourism aspects for the rest of the region? Independently, with the geopolitical risks, is oil going to be more of a stagflationary type of shock that keeps that recessionary part of risks in play, or it's going to soften up and provide some breathing room for the recovery, as bumpy and as fragile as it is, to resume? So these are really the big questions. But as of now, surely the thing that within Asia compounds the pain is the fact that food inflation is now going to accentuate the pain from energy inflation. On paper, this is inflation that central banks must respond to. On the ground, it is actually an erosion of spending power and consumption, which is actually feeding into recession worries. And the
And
bigger
especially in this part of our region, Vishnu, you find that because of food inflation, that of course hits the bottom 20-30% the hardest. So we have markets like Malaysia, which are now looking at rejigging their subsidies in order to address this issue, because as many analysts have pointed out, there is a real risk of unrest.
I think this is and I think you put it very, very nicely there. The eloquence of it is good, where we cannot isolate things as an economic risk and not recognize as also social risk, particularly coming from where we are, 2 years of distorted COVID kind of restrictions, lockdown, pain, so on and so forth. So it is in a fragile state, the social, economic, and even the political state of it. And really, I do not envy the jobs of of central banks in this part of the world, because on one hand they do recognize the pain on the ground, and they're trying not to raise interest rates aggressively to compound that pain, but equally they're also aware from past experience that when the Fed hikes very aggressively and they don't respond, capital outflows can add to financial tremors and turbulence that also can inflict the same type of pain. So it's between a rock and a hard place, and that's perhaps the takeaway for us, even as we see markets going back and forth with their assessment on this.
Now, Vishnu, looking ahead with the start of the week, what are some key economic data and events that we should look out for that will move markets?
I think we're packed with policy events that is going to pepper the rest of the week. So we've got the RBA meeting tomorrow. Beyond that, we've got Bank of Thailand meeting. We also have got the Reserve Bank of India. All three central banks will probably have to respond in one way or another, whether in words or deed, to what the Fed has done so far in inflation risks. We think RBA and RBI may pull the trigger with a larger than expected hike, whereas Bank of Thailand may stand its ground, but not for long. Very, very interestingly, and perhaps with a bigger impact on foreign exchange markets, would be the ECB that's meeting this week. There's some sense that if they do turn a bit more hawkish, the euro can strengthen. As a corollary, the dollar may weaken. Our warning here is that a slightly weaker dollar, if ECB delivers conveys such a perception, is there may be some relief, but really it's not going to be lasting for EM Asia, because you can just get a stronger euro without necessarily taking away the edge of a harder dollar for EM Asia, where it's a different kettle of risks that still confront us.
Now, Vishnu, as always, thank you very much for coming on the show. Thanks again for your insights.
My pleasure as always.
Now, we've been speaking to Vishnu Varathan, Head of Economics and Strategy at Mizuho Bank, on Biztech's Asian Midday Market Watch, powered by Rajhi Bank, Malaysia. I'm Brian Fernandez. This video will be on our various social media platforms, as well as our website, www.biztech.asia. It will also be on Rajhi Bank's social media platforms. Please like and subscribe to our various platforms. Thanks again for tuning in.